All right, so I'm going to be going over this particular system of trading. I call it a system because it's not just an EA. It can actually be done without the EA if you have the right parameters that you can come up with. But with the EA, you're able to simulate scenarios, and then of course you have a system that is already built in that you can actually use. All right, so I'm choosing to call it the prop gamer system. And basically, what it does is a situation where you're able to actually get paid even when you lose your prop challenge, right? That is what a lot of us, some of us, have taken so many challenges that we can't even count, so many evaluations we've gone through. Um, the pass rate in general is between about 5 to 10% on average on the typical two-step evaluation that we usually see. You can actually go and confirm dates. Just um, can maybe ask any of the AI bots, any of the AI, Gemini or Claude or any of them, and then basically they'll give you a summary or you could go to your own research. So about 5 to 10% pass rates, and then of course less than 1% actually make it to actually getting their first payouts from prop firms. So I asked myself, like I mentioned in the write-up, how do you flip the script? So there are two ways you can do that. Either you get better at trading or you find a way to make money when you lose. Since the edge, the prop firm's edge, or even most brokerage that a lot of retail traders use are actually B-book, which means they basically internalize your trades. The reason why they're able to do that is because they have that stats behind them that 90% of traders are going to fail. They're going to lose their money and all that. So the question is there any way that you can be on that other end where that's edge, that's natural stuff that tends to happen that most systems, and I've built several systems, so at least I can talk about it. For those of you who were around for the webinar in December, where I looked at various types of edge in the markets, um, most of the things you see, people have come to me to code so many things. These days, if you come to me to code, before it was 10% upfront, but I've had to increase it to 50% because so many times by the time you finish building the EA, people test the EAs, test their ideas, they now discover the thing doesn't really work long term. So it might work over a 3 months period, a 6 months period, but a lot of these things don't work long term. So the question now becomes, okay, I've created a system already that uses positioning and is giving good results, which is the FX legend. So correcting many of the errors that we saw with the trend engine and all those, because we are no longer having long-term trends. We are just looking at a day-by-day basis, which basically made all the difference. Um, so I decided, okay, what if instead of improving, like we've done with the FX ledger, instead of improving trading, why not? Can't we make money even when we are losing, right? And that is basically what gave birth to um, this particular system. So I'll quickly run through the Excel sheet and then I'll give a brief moment for questions before we then go into the EA. All right, so let's start with, let me do the one that every person can, every person can, well, I say relatively afford because with 100K, you actually need about 5K to run a 100K firm um, channel. So let's do this for a 10K, which is more easily accessible to everyone. And I'm going to be using one of the most expensive, which is FTMO. A lot of things I'm going to be doing are just for ease, easy purposes. We're just going to be using the FTMO two-phase model. And this model basically works with static drawdown. So trailing drawdown really doesn't make sense with this particular system. All right, so the max drawdown is 10%. The account target is 10.1%. So this cost allowance, so whenever you are trading, you are going to incur certain costs. commission swaps and all that. Now, for this particular, the way the EA was built, I don't know if you choose to use it outside of the EA, you might incur swaps, but the way the EA was built, and it was built for prop firms, because I noticed that prop firms, when you compare them to the typical brokerage, their commissions are slightly less than your normal broker, at least with IC markets. If you are comparing almost all the firms with IC markets, the commissions they charge generally tends to be less than IC markets. But the swaps, oh my God, the swaps sometimes are up to times five of what IC markets actually charges in swaps. And when they are going to pay you, it's also like divided by five when they are supposed to be the ones paying you. For instance, if you are selling EU, they are supposed to be paying you swap, but the swap is almost insignificant, right? On prop firms like Funded Next is almost next to nothing, right? So I decided that the way the EA was going to function, we're not holding trades over the night. So no swap fees, just commissions every day. Take a trade, end of day, you close and all that wherever you are if it doesn't hit the profit targets. All right. So, but either way, we are allowing 1% for costs, right? So commissions and swaps. Now, yeah, you can actually put the amount you want to risk, right? You want to put the amount you want to risk, and then we have the account target like before. So this is going to give you, it's going to come up with this, the phase one multiplier. Now, basically, what we are going to be doing is that we are going to be hedging between our accounts. Now, the reason why this is possible is because there is a loophole in the prop firm game. Um, that I think some people, I'm not the first person to actually come up with this idea, but I think maybe I'm the first to talk about gaining on prop loss. What many people do is just to get the account back when you lose it and all. So what we are basically doing is that we're going to be hedging between our prop accounts and the personal brokerage account. And the reason why this thing is possible is because there is a discrepancy between how much you pay and how much you get to control. I will say that again. There's a discrepancy between how much you pay, how much of your money is involved, versus how much funds you're actually controlling. So let's say on a 10K account, right? So people usually say they give you a 10% drawdown. So in effect, what you're actually trading is a 1K account, right? So we assume we are trading a 1K account, but how much do you pay for that 1K account? You paid $110 for that 1K, right? 1K because it's 10% drawdown. So 10% of 10K is 1K. And the account cost is what? 110. So you paid 110, but what you actually get is 1K, right? Now, on your personal brokerage, it is then possible to use a particular multiplier, right? So if we take a buy on EU on our prop account, we're going to be taking a sell on the same EU at the same time on our personal brokerage accounts. That is how it's basically going to work. So the EA automatically calculates what this thing is supposed to be. So in the when you're using it for tests, when it's running simulations, as we'll see, it does all the calculations manually. If you're going to be using it in the live market, what it's going to do is that the moment you put in your parameters and place it on the charts in your prop accounts, it's basically going to tell you the right multiplier that you're supposed to use on any trade copier that you're using. So basically just trade copy. So that way there is nothing like um, a trade was picked here, it wasn't picked here, it hit TP here, it didn't hit stop loss here, and all those kind of things. So the moment the trade is closed, is opened here, it's also opened, the opposite is open there. The moment it's closed somewhere, it's closed on the other side, right? So this basically tells me, so gain on prop loss, it's not 500. I'm just going to say, let's say 90, for instance. So I want to gain $90. I want to make $90 every time I lose the account. Now, this is what is going to happen on phase one. Please follow closely, right? Follow closely. All right, so let's assume that I pass phase one. Basically, what has happened is that I've made this amount, right? This is the target, 10.1. So I've made this target. I would have lost using this multiplier because I'm copying the trades to my personal brokerage account with this multiplier. So if I take a trade of, say, one lot, it's going to take a trade of 0.22 lots on my personal brokerage, right? So if I lose this, if I gain this on the proper account to pass, I would have lost this. However, in gaining this, there is a commission or a cost that I'm assuming I would have paid. By the time we start running the EA, you would see that it's not always 100, but I've discovered roughly a good average is about 1%, right? A good average is about 1%. Um, you can do something less, but a good average is about 1%, right? Sometimes it's slightly higher, sometimes it's lower and all that. But on average, I think most times it's going to be lower, right? But let's just leave it at that. So there's this commission that was paid that is ready for me to even get here, right? So that commission, I need to calculate what the equivalent will be for my personal brokerage. And that is what I have here. So this is the amount that I lost in actual trading. This is the amount I lost in commissions on my personal brokerage, right? So that will give me minus 246.67. So if I pass phase one, right, what it basically means is that I would have lost 246 on my personal brokerage, right? And then I'm on to phase two. If I fail, on the other hand, so the amount that you would have lost is 1,000, right? But to get to this 1,000, there's already $100, of course. So the actual thing that you would have lost from trading is about 900, but plus the commissions you'd have paid, everything will be 1,000. So on the personal brokerage, the 1,000 you have here, the equivalent of it that you'd have made on your personal brokerage is this, minus the costs, which is the commissions that you would have paid. And that will give you 200, right? Now, remember, you made this money, but remember, you've lost your prop firm account, which is what we have here. So if you fail phase one, you would have gained 200 in your personal brokerage. The account, you would have lost the prop account, and the account cost us 110, and your net gain is 90. If you pass phase one, the account cost you 110, you would have lost in your personal brokerage 246. You are behind $356, but you are on to phase two. So we go to phase two. So remember 356.67. So if we come here, approximately 357. That's what phase one cost us, right? So we go through the same thing again. Max drawdown, 10%, cost allowance, 1%. A lot of times when you lose in phase two, this is usually sweeter than phase one because the costs is way less. Most times you don't get up to this point majority of the time from what I've seen. All right. And also if you pass, the cost also is much less. So gain on prop loss, all that. So you see the multiplier is slightly higher. So this is what you need to have. This is what if we lose, this is what you need to have in your brokerage. This is what you're likely going to lose in your personal brokerage if you pass phase two. So you can actually make this thing higher or smaller depending on what you do here with this gain on prop loss. For instance, if we take this to 50, you'll see that the amounts you'll be losing on your brokerage will be smaller, right? To have reduced. So anyway, let's leave it at 50. Let's just leave it at 50, right? It will reduce the amount you make overall. I'll be sincere with you, but you know, it will also reduce the amount of capital that you need to run the system. All right, so let's assume again you pass phase one, you pass phase two rather, right? So you would have made this because phase two is now 5%. So you would have made this on your personal on your prop account, right? The cost again is this, the commissions that you need to pay to even get to this point, right? So on your personal brokerage, this is what that cost is going to look like, plus the amount you lose normally. So you would have lost 242. Now, if you fail on the other hand, you would have lost the account, right? So, and you'd have lost the account by hitting a 10% drawdown. The equivalent on your brokerage account is this minus the costs that it costs you to get there, which is 357.33. So if you fail phase two, right, you would have, anyway, since I started with 90, let me just leave it at 90 so that we stay consistent. Well, let me look at 50, right? Just know that at this stage, when you fail, based on, remember, this is the ideal model. It's not going to be like this perfectly in real conditions by the time we start testing. So you make 50 if you lose phase one, you make 50 again if you lose phase two, because you would have made this, but remember the phase one costs. This cost of phase one is made up of both the cost of the account and the brokerage loss, right? So you need to make that back. And what you would have actually made from this whole process is $50. If you get to pass phase two, then you would have lost, you are down by the entire amount in phase one plus the amount you've lost in phase two, which is this. So at this stage, the way that some people do this is that they basically just use this to pass, right? So they are not interested in using it to trade the funded stages. They just want a situation where anytime they don't get funded, they get paid. Anytime they don't get funded, they get paid or they make their money back. Anytime they don't get funded, they get paid or make their money back. And anytime they get funded, they pay slightly extra. Now, for those of us who have ever tried to buy, what's it called? Instant funded accounts, you will know that for a lot of the ones that give you this kind of conditions of 10% max static drawdown, not trailing drawdown, 10% max static drawdown, 5% daily drawdown, you would almost never get any firm that is going to give you a 10K account for $549. It's impossible. If a firm gives you this, please go and check their rules. Their rules are going to be so restrictive that it will be very, very difficult to be profitable with that firm or with that particular um, challenge, right? So this is one way to do this, that you are sure that the only time you are actually going to be down money is when you actually get funded. So you can spend 550, you can lose 550 to get access to 1,000 guaranteed capital. I'm not even saying 10K now. We know it's 10K prop accounts, but we're saying the actual money you get access to is $1,000, right? So paying 550 to get access to 1,000 already is already a good deal, especially if you now have a good strategy that you can back it up with. This is largely how I intend to do it, because use this to either pass or fail very quickly and then move accounts as I pass to the FX Legend system to now treat the funded stage using the FX Legend. However, you can also use this system to go ahead and trade the funded stage. So let's move on. So you get to the funded stage, you have your account capital 10K, phase two costs. Remember here, the phase two cost is everything we spent in phase one plus the brokerage amount we lost in phase two. And then we have the sum as the phase two cost. So this is what it cost us to get that funded account, 550 roughly. All right, so now we're assuming our profit split is 80%, max drawdown is still 10, our cost allowance is still 1%. Now, gain on prop loss still stays the same. So usually you can't change this until the cycle is complete. The cycle is complete when you lose the account. That's the only time when that cycle is complete, is when you lose the account. So the account target is 2.1. We can change this. But the reason why I left it like that is that um, to make sure that no firm is going to give you any issues, we are just going to be risking 0.9%. On the funded account, we are going to be risking 0.9%. So almost every firm says 1 to 1.5%. So we don't even want to near that they are normal per day. This is what I mean. Or even per trade idea. We are going to be risking 0.9% per day, right? Once we get to the funded stage. So that will take us about 3 days. Not up to 3 days, but 2.5 days, 2.5 trades, kind of. So part of the reason is in case if it's a firm that has consistency rules and all those things, you still get to meet up with all those kind of consistency rules and stuff. All right, so you get the phase two multiplier, you get the brokerage costs. So this is basically again what you will be losing or what you might be losing. It will usually be less than this, and we'll see why by the time we get here. All right, so let's assume we hit the target. Now, 2.1%. To hit 2.1%, definitely our trading cost is way less. So we are assuming here for the funded stage, uh, our trading cost is going to basically be, we are going to be using the difference or the division. So if we're assuming that when we hit 10%, right, we lose 100. So to hit 2%, our cost should be about 2.1%. So that's why this is this. So we lose this in the brokerage. This is the commissions that we pay. This is the total loss that we have, but we make this on the prop side of things, right? So this is what we make. 80% of it, that's our profit split. This is what we lose in total on the brokerage side, right? And we get this, right? So if we fail, we lose the account. This is what we'll make on the brokerage side, right? Again, this multiplier is automatically calculated. Formulas are already set there. Then this is the commissions that would have paid, and then we'll have this. So the brokerage gain, this is what it will be, minus what it cost us to get the account. We make our $50 back. So usually in the real sense of it, you're going to be making way more than this in actually funded because the costs are usually way less, but we'll just assume this for now. So you will see that what we've basically created is a situation where, and then there is something we didn't factor into this place, and that is the fact that on your first payout, you actually get your what's it called, the cost of the accounts refunded to you. So I didn't include that in what you see on your screen. So that's basically how it works. I will allow some time for questions before we move on to looking at the EA. So if you have any questions, just raise your hand, just indicate, and I'll allow you to unmute yourself and ask your question before we go on to the EA aspect of things. If you have any questions about what I've just shared on the Excel sheets, I expected most of us should have gone through the videos so that if we have any questions, um, we'll have just come to ask the questions. So, any questions? All right, so nobody is raising their hand, so I believe that means that it is clear. All right, Anthony, please unmute yourself. I've asked you to unmute on the system where you raised your hand. I notice you are joined with two accounts. Okay, someone said, Eureka said 5K example. How much does the 5K account costs? How much does a 5K account cost so that, okay, let me just do this temporarily. Let me just allow everybody to unmute. Please don't just unmute anyhow. So, Anthony, you can unmute yourself and ask. Eureka, please, what's the cost of a 5K account? What's the cost of the 5K account? I need it to simulate that. Anthony, you can go ahead and ask your question as well. Please, let's be quick.
Okay. Yes. Can I speak?
Yeah, go ahead.
Yeah. So on my don't mind me, on my laptop, the microphone was not working.
Oh, okay.
That's why I'm joining with my phone. So the question I want to ask is, um, for a 10K account,
Yeah.
how much are you supposed to have in your brokerage account?
Okay, so it depends on what you want to achieve. Are you going to be, do you just want to pass, or do you want to also use it to trade the funded account?
Okay, to pass.
Okay, just to pass, you are going to need this phase two. Where is that? You are going to need the phase two costs, plus about maybe let's say about $100 extra. That's what you need in total, including the cost of the account. So let's say you need about $650 to run this on a 10K account.
Okay, $650. Okay.
Yeah.
Understood.
Okay, so Eureka, $55. So I'm assuming that the parameters stay the same as what we have here. So let's do that. Um, and then 55. Now, one thing people should know is that most of these lower accounts usually tend to cost more. All right. So let's assume I want to make $40 on each loss. All right. So if you just want to use this to pass, basically what you need is about 315. You can add an extra 50 to $100 for that. So let's say about $400. You're going to need about $400 to run it if you just want to use it to pass. If on the other hand you want to use it um to trade the funded account as well, you are going to need to have 316 plus 122. It's going to be about as 438. So let's say about an extra $100 outside. You're going to still need about 550 to trade through, both on your brokerage, cost of accounts, and everything. That's what you're going to need. So basically, what we are creating is you are now going to cycle that capital over and over again. It's not like the moment you fill an account, that cycle ends, you would have made money from somewhere, either from repeated payouts. By the time we go to the year, you see that a lot of times you get a lot of payouts, but the issue is that you don't know when those payouts are going to come. So you're going to have sometimes you lose, you'll take like 20 something evaluations, pass like six, get like 13 payouts and all that. So you make money from different cycles and all, but it's still the same capital that you're turning over throughout the year, or as long as you are doing it, except you decide to now increase the amount you are putting in, either by upgrading the account that you are trading, which will make every other cost to go up, or by increasing the gain on prop loss, which will also make the amount you need to have in your brokerage to go up as well. All right, so I believe that that is that about that. So in the absence of any other questions, I think we can get into the EA. All right. So, someone asked about the fact that I didn't use every tick based on real ticks the way I talked about in the FX Legend for this. So I decided, okay, for this one, I'm going to be using that. I want to show us something so that sometimes when we charge for some things, people don't really know what goes into it. So this is my TDS data where I have data from so many things. So you can see USD, GBUSD, and because I'm already started working on another EA, third EA, that is basically for the indices and all that. Had to download going back. I think this was almost going back to was it 2018 or so. Data and all that. So you can see that that is almost 60 gig. This is almost 60. Yeah, should be 60 gig, 60 gig of yeah, about 60 gig of data, child data that I had to download and stuff. So, but let's just do this. So you can actually do it because we are not really going into the tick per se. We are using 1 minute as we'll see in the inputs. So it doesn't really matter so much whether you are using tick data, real tick, every tick based on real ticks, or whether you're just using every tick. There won't be so much difference. As always, when I'm backtesting, I usually like to add a delay to see because um, apart from your connections, both brokers and prop firms sometimes, depending on the size of your account, can actually put delays, which can lead to slippages and all those things. So you want to emulate all those things when you're testing. That is why when MFF, the whole, sorry, I digress, and we are talking about the whole slip me to hell, all of them do it. It's not just, so it wasn't a new thing per se. All right, so let's do this on a 10K account. So we're going to put 10K here. This is tick data downloaded from Duca's copy. So we are going to be testing the whole of 2025. So we're going to the inputs. So you have the trading hour. So this can be any normally, just like for those who have the FX Legends, we usually the trade takes trades by 1 a.m. So as soon as market opens. But I discovered that sometimes the spreads on brokers can widen. It can still be a little bit wide. Not so much, but even that 1 pip spread is something that we don't really want, or the either the prop firm or whichever side we are trading. So from like 1:30, you can do this from 1:30 to like 3 a.m. Right. So want basically to enter early in the day so that it has time to play out as the day goes by. We don't hold trades over, so we have the delete time. Any orders not picked or any trades running are closed at that time. 1 minute, nothing. So you must put in. So the fact that you have this here is doesn't mean it's going to trade this. This has to be, this is what it's working with, this is what it's trading. All right, so trading mode has to be test if you are running simulations, if you are using it on a real account, live, and all that. But let's go to the main things that matter. So you can choose trend or counter trend. I discovered that counter trend seems to make the most money um, because it loses the accounts faster if there's need to lose the accounts. All right, so should it trade the funded stage? For now, let's say no. So we just want to use it to pass account capital. It has to be the same thing as what you chose in the normal tester settings. All right, account costs 110. Gain on Prop Plus, let's do 50 like we did. We'll leave this for now. We'll still come back to this TP multiple later. Phase one settings 10.10, 10% risk. So for the challenge phases, we are going to be risking 3.5% because we want to either fail fast or pass fast. Phase one, 10.1%. Phase one cost allowance 1%. Phase two again, 10%. Risk 3.5%, phase two target 5.1%. In the real life sense of it, if you want to be using this, you have to put in the amount lost in phase one, right, in your phase two. But for the simulations and the back tests, it's going to get the amount lost. It's going to calculate all the commissions and then do the multiplier to get the equivalent. All right, funded phase, we are risking 0.95%, 2.1% targets, include refund of first withdrawal. You see the difference that this would actually make. Profit splits